Hi dear listeners, in this video we will talk on IAS 16 property plant and equipment. The objective of this standard is to prescribe the accounting treatment for property plant and equipment so that the users of financial statements can use the information about an entity's investment in its property plant and equipment and changes in such investment. The principal issues in accounting for property plant and equipment are recognition of assets, determining the carrying amount and depreciation charges, and impairment losses to be recognized in relation to them. Let's see what is property plant and equipment. Property plant and equipment are tangible assets that are held by an entity for production of goods and services or for rentals to other or for administrative purposes. And future economic benefits are associated with these items, and they are expected to be used for more than 1 year. So here are some accountable events in the life of property plant and equipment, and one of them is acquisition, which means calculating the cost of property plant and equipment. Second is allocation or charging the depreciation over the useful life of an asset. Third is disposal of asset, and one of the most important significant event in the life of property plant equipment is revaluation. Now we will see how to calculate the cost of property plant and equipment. The cost of an item of property plant and equipment shall be recognized as an asset only if it is probable that future economic benefits associated with the item will flow to the entity, and the cost of an item can be measured reliably. An item of property plant equipment that qualifies for recognition of an asset shall be measured at its cost. The cost of property plant equipment is the cost which is the cash price equivalent at the recognition date. If payment is deferred beyond the normal credit term, the difference between cash price equivalent and the total payment is recognized as interest over the period of credit, unless such interest is capitalized in accordance with IAS 23. So the cost include the cost of purchases, any net trade discount plus any import duties and any non-refundable sales tax. Any cost which is attributable to bringing the asset into present location and condition, which is necessary to be capable of operating in a manner as intended by management. These are the costs that would have been avoided if asset had not been purchased or constructed. General overhead cost cannot be allocated to the cost of property plant and equipment. Only directly attributable costs should be added in the cost of property plant and equipment. This include employee benefits payable to staff, installation charges, construction charges, initial testing cost of an asset, any cost relating to site preparation, any fee relating to professionals which are involved in installation and construction or initial testing of the asset, any other overhead cost directly attributable to the installation or construction or initial testing of an asset. When we will calculate the cost of property plant and equipment, all the reasonable and necessary costs will be added in the cost of property plant and equipment. And after we have calculated the cost, we shall pass a journal entry in a manner as I told you in my first video how to pass journal entry. So our journal entry would be any cost the property plant equipment which will be machined will be debited, and cash or bank will be credited in case we are paying by bank. So the general entry would be machine debit or any property plant equipment debit, cash credit. Thank you very much for watching this video. Just wait for next video in which I will explain how to calculate depreciation and what are different methods of depreciation.